deeper look at whether CYCC is a buy, considering its business fundamentals, recent developments, technical signals, and risk-reward profile. Ciclacel's core focus is on developing innovative cancer therapies. Its lead asset is plogosertib, an oral PLK1 inhibitor, which is being evaluated in a Phase 1/2 clinical trial for advanced solid tumors and lymphomas. The company recently made a strategic pivot by liquidating its UK-based Ciclacel Limited subsidiary, a move designed to streamline operations, reduce R&D expenses, and focus resources on plogosertib. According to management, this restructuring will boost stockholders' equity by approximately $5 million and significantly lower operating costs in 2025. This is a positive step as it extends the company's cash runway and signals a more disciplined approach to capital allocation. Financially, Ciclacel remains in the red, as is typical for early-stage biotech companies. For the full year 2024, the company reported a net loss of $11.2 million, an improvement from previous years due to lower R&D and administrative expenses. At the end of 2024, Ciclacel had $7.2 million in cash and equivalents, which management believes will fund operations into the second quarter of 2025. This means that, barring a major partnership, licensing deal, or positive clinical data, the company will likely need to raise additional capital within the next 12 months to continue its research and development activities. This could result in further dilution for existing shareholders, a common risk in the biotech sector. From a technical perspective, CYCC has shown some positive momentum in the short term. The stock has rebounded over 50% from its April lows. In summary, Ciclacel Pharmaceuticals is a classic high-risk, high-reward biotech speculation. The company's streamlined focus and cost-saving measures are steps in the right direction, and any positive clinical news could trigger a sharp rally. However, the near-term funding risk, lack of revenue, and binary clinical outcomes make this stock appropriate only for investors with a very high risk tolerance and a deep understanding of biotech investing. For most investors, CYCC is not a clear buy at this time. If you do decide to take a position, it should be a small part of a diversified portfolio, and you should be prepared for significant volatility and the possibility of total loss. For those who prefer more stable, lower-risk investments, it's probably best to watch this one from the sidelines and look for confirmation of clinical and financial progress before considering an entry.